Hey guys, welcome back to another week of trading. We are almost finished up with August, one more week to go. I have logged in another trade, and this was taken on the 7th of August, and we just closed it out recently. So it was actually a win on gold, and I'll show you guys here. Basically, we were bullish on gold on the 8th of August. We took an entry on this doji here, stop loss under this rejection wick here. You can see it went up, actually wicked us out, and continued to go up. So in hindsight, look, I moved the stop up because we had big news incoming, FOMC and Powell. If I was to listen to my strategy through and through, I should have kept stop loss here, but it is what it is. I'm happy with this trade. Um, we will still look for re-entries on gold, but that is, yeah, that's a nice 2.7R made for the month. We still got another week to go. But let's go back to our fundamental analysis for the 19th to the 25th. COT report wise, we have an increase in volume on all stocks. You can see US 30. We have bullish reading on US 30. Oil and gold haven't really changed too much, so COT reporting not really different. I do notice volume injected in gold, and I am long for gold in terms of a bias, which we'll go through. Data, the only thing that changed was flash services PMI and flash manufacturing PMI. Manufacturing was cooler, services was hotter, sort of cancelled each other out essentially. So not too much change in terms of, just the data we have on this algorithm here. But looking at the actual pieces, piece by piece, we had crude oil inventories that we're going to start to follow now. It's released every week. A lower number is better. It means that crude oil in the inventory is actually being used, and demand is increased. So we can see almost 2 times more than estimated, lower than last week's data. So very bullish for oil. We had FOMC and Powell on the same week. So FOMC, what FOMC stated was that there was a higher perceived likelihood of September cuts. Also mentioned appreciation small and medium cap stocks, which are the most sensitive to interest rates. So when interest rates get lowered, then asset classes like your small to medium cap stocks, which really rely on borrowing, and with lower rates they can borrow more, it's actually very bullish for these small to medium cap stocks. FOMC also stated that labour market conditions continued to ease. We'd had job gains moderated, unemployment rate moved up, however was still remained low in the bigger scheme of things, as interest rates are quite high right now to curb inflation. And then we had Powell on Saturday, and he states that the upside risk to inflation has diminished and the downside risk to employment has increased. So basically, inflation cooling, unemployment increasing, and the downside risk to unemployment increasing means it is time for the time has come for policy to adjust. So we're definitely or very confidently looking at a rate cut in September, but whether it's 25 or 50 basis points, we're not sure yet. Most likely leaning to that 25 basis points cut. So a cut in September would be bullish for gold. It would be probably net negative for oil, and then net positive for stocks as well. However, in terms of the data we have so far, I am still bullish oil, and we'll go through it later. In terms of yen, we had Governor Ueda speaking, stating that he will continue to hike rates if the inflation remains on track for its target 2%. So we're expecting the yen to hike rates, strengthen itself up, in the midst of everything sort of just going the opposite way and cutting rates. So we could actually get bullish on yen, depends how we want to play this out. PMI for pound was both hotter than expected for manufacturing and services, um, and has been above the threshold for 10 consecutive months. So very bullish on the pound. And USD PMI, we still have like um, like the ISM services and manufacturing. We had the same deal for flash services and manufacturing. Services doing really well, manufacturing doing really poor. So sort of cancel each other out. I would say it's a net um, bearish for USD, just considering manufacturing as the main mover. Well, I believe this is a personal view, the main mover of markets and economy, right? The health of a currency in a country. So I'd say it's a net negative, and we have 14 months. It's declined at the fastest rate in 14 months. So very not the best for USD. And because of that, I'd say, from a gold perspective, even more bullish on gold, where we have decreased rate cuts, most likely for September. We have poorer than expected economic news, meaning uncertainty, meaning people who can now have more money to use will start to put into safe havens like gold. So, just going into individual data points, we can see crude oil inventories lower than forecasted, which is net positive for oil, and you can see it has been for the last, let's say, 8 weeks, which is really good, and a general down trajectory for oil. So in terms of inventory, so we're actually I'd be quite bullish on oil. In terms of PMI, you can see pound PMI manufacturing going up, nice trend up. Services PMI still hovering above 50 into expansion, and sort of just trailing around expansion. So very good for pound. USD, you can see net negative for manufacturing, trailing for services. But again, like I said, manufacturing being the leader of the economy, not a good sign for USD. Existing home sales. So this is what I wanted to point out, was we had decrease in existing home sales. We had easing of interest rates. We had more borrowing because of stimulating the economy, and then we had increasing interest rates, back up, back down. So I'm expecting we're going to start to ease. We go back up for existing home sales and then back down, like a cycle. Next week's data, big one I'd say, is preliminary GDP numbers. This will give us an indication on the economy, particularly looking at stocks for this one, seeing if GDP is increased, and also oil, just in terms of more activity and more use of oil, more business activity for stocks. That'd be a great indicator. So GDP as the biggest news for next week. Take home message, we had rate cuts confirmed for September, overall bullish for gold. Even better that we had poor PMI numbers, so again, gold being very bullish. Inflation still high, oil inventory is lowering, high demand for oil, happy to go long, and then now we'll start to incorporate US 30. Rate cuts for September most likely make it bullish for US 30. So, going to my trading now. You can see, let's go to the US index. We're at a nice support right now. So from a technical point of view, we're at a nice support. Going into gold, like I said, if we can get back to here, I'll add an alert here. If we can get back to here, I'll probably look to get another entry through under here. Right, and yeah, look to push all-time highs, but we'll see. We'll move this here. We might actually even put a stop just here, just a wider stop here, but again, we'll see. that would be, ideal. If it touches there, comes back down and shoots back up. That's what I'll be looking for. In terms of oil, we'll go to the daily chart for oil. You can see right now it's net downtrend, right, for oil. We have hit a nice support here, so if we go weekly, let's have a look if this is a good support from a weekly chart. Yeah, not really, still a bit high, but good rejection wick on a weekly. Daily, we can see nice impulse. If we can see a break of here, come back down, we can potentially get long here on a daily chart and follow it through. So that's the plan for oil, but not until we break this cleanly. The next one is US 30. US 30, we had a nice daily level here for US 30. We are hitting resistance here, so to be really honest with you, I would not want to touch US 30 until either it comes right through here for a nice entry, or it breaks here cleanly and we can go up for a continuation. So we're not touching this just yet. We'll see how it plays out. So the only trade I'm really confident on right now from a technical and fundamental point of view is gold. If gold can somehow, and we can either do this as well, resistance, that here, take this off, just to clean up the chart a bit. But if gold can either break here, come back, retest and push up, or if it comes down and pushes back up. So that's the aim of the game right now. Let's see how this week goes.